Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar once again took the challenge to the upside, but found a little bit of trouble again at 69.25.35 after posting an intraday high of 69.27 and previously, as you can see, was at 29. From the failed attempts, this is now seen as the fourth and therefore does expect to see further weakness eventually emerge to 68.60 and a break beneath there. I'll be looking at 68.25 to 67.70 as the objective. If any arises, should still continue to fail. Yesterday, the RBA, as widely expected, kept its official cash rate on hold at 0.75 or 3/4 in November's meeting after cutting rates by 25 basis points each in June, July and October. In the statement accompanying the decision from the RBA, Governor Phil Lowe said that while the outlook for the global economy remains reasonable, the risks are tilted to the downside. Furthermore, easing of monetary policy since June is supporting employment and income growth in Australia. So no doubt it would seem that from the statement that we have a wait and see approach from the RBA, although there are some people out there viewing that we should get a cut very, very soon, back to a point of 0.50 or 0.5% by early 2020. The bearish outside range day for the euro was confirmed overnight after the market fell suddenly towards the region of now the key support level of 110.65. I do ascertain that the market may take this level out and therefore expose the region of 109.50 due to the fact that we are married together with the RSI and the MACD and it is strengthening from the break of 110.65. Therefore, any advances I expect to find 111.35 to cap and any view from there to draw the bears back to the challenge. Dollar yen, while the market has moved further to the upside and at this stage is pressuring the level of 109.20. I do ascertain that the market still at this stage hasn't confirmed the last three candles, so we could still see a rejection from there. Although a close above 109.20 on a New York basis in the morning, that is, then I would say that we are looking for a squeeze up to 109.70. But at this stage, it was a good rejection, so I can't see why we should see another one and look back towards 108.65 and 107.85. Sterling still hardly changed in the last 24 hours. Nevertheless, the market is still poised for a break due to the fact that we have the RSI and MACD married together. This will see eventually in terms of a move to 128.40, maybe to the trigger level 127.85. It is only from a break from there that I do expect to see further weakness down towards the 124 region. A very strong sell-off in gold overnight. Now, I did note that due to the ADX on the weeklies does give a lacking fact to the bull trend. And at this stage, we're still trading in noise. And that's all I'm seeing. With the level of 1,495 taken out now, looks towards a base that was recently challenged, as you can see in September, around 1,460, or maybe finding support at 1,476. Nevertheless, I'd rather stay out of the situation of trading gold until I get a little bit more confirmation when it comes to the technicals, because at this stage they are still a little bit mixed at these current levels, and taking out the level of 1,495 from this trend line here does leave me neutral, but I would be looking towards the bottom side of the range as an opportunity to re-establish a long position. And finishing up with oil, when the market reaches again and contests the level of 57.55 and was respected. At this stage, I am neutral for oil as well because it's reached my target and I'm waiting for the pullback, which can be somewhere between 55 or down towards $54 where this trendline support comes in. But do note that if we do get a break above 57.55, then this would actually see further implications to the upside and maybe look towards a target of 59 to 61. So we'll have to wait and see. But from the technicals, it's not quite strong to support this bullish case. So thank you very much for joining me. And as always, look after the intraday report. And I hope you enjoy this great start to this wonderful day.